Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at SPY on the daily and weekly time frame. So the bulls did buy the dip at the end of the day, and we actually closed in the 225.40s. This is factoring in after hours. But we have this tightening range forming with the all-time high, our low from the Fed day, 224.04, our lower high at 226.57, and now the bulls want this to be our higher low at 224.92. So it's a very clear tightening range, reaching an equilibrium after the breakout, and we're either going to see a clear bull break and a new all-time high, or a clear bear break indicating further consolidation is coming. At this point, it's too soon to say. We are on the verge of a bear MACD cross, so pretty much the range is going to be it's going to hinge on the low of today, 224.92. If we break that level tomorrow and end the week with that momentum to the downside, we will be looking to test these last couple supports of the short term early next week of 224.04. The weekly time frame, bearish reversal doji last week, bearish reversal inside candlestick doji this week, but still battling to hold 225.55, the upper Bollinger Band, to remain in breakout mode. So indecision at the top of an uptrend does favor the bears, but as we know, when a chart is in blue sky breakout mode, it's a lot easier for the bulls to completely negate bearish reversal candlesticks and continue to the upside. But 2 weeks of indecision and an inside candlestick will certainly give us clear levels to be watching heading into next week. Looking at SPY on the shorter term time frames, the bears were in control at the start of the day. We really saw it yesterday. That end of the day action, very strong for the bears. So the significant bearish action all occurred in the final hour of trading yesterday. So we knew the momentum was bearish going into today, especially with that close at the low. So when we opened today and we rejected first thing from the 100 period and 20 period 5-minute moving averages, we knew the bears were strong. Lower high, lower low, bears in full control. They did end up bouncing around noon and did see some momentum to the upside. But if you saw yesterday's video, I was highlighting how about 4 or 5 times we rejected from 226.25. And we had the same kind of action today, except it was from 225.50. So 225.57, 56, 56, then another bounce up here, 225.54, 53. So very clear resistance in the 225.50s, rejecting both bounce attempts. And we saw another pullback near the end of the day, but we did see a little bit of a rally, and we closed right below that resistance level. So I'm watching a couple resistances, 225.57, and then up to 226.25 if the bulls want to reverse this trend. But we do have all hourly moving averages as resistance for the first time in quite a long time because of how strong we have been. And at least 10 days, zooming out to the monthly. So the last time we had all hourly moving averages as resistance was back on December 2nd. So about 3 weeks with all moving averages as support, but that is no longer the case. And we'll have to look to these resistances tomorrow to see if the bulls can turn them into support. So the daily chart has a nice lower wick. We got plenty of resistance levels to be watching in the short term, and we'll see if the bulls can close the week on a bullish note. But again, these hourly moving averages will likely have to become support in order to do so. So we'll check back in and see how the week wraps up. I appreciate you watching. Have a great night.